Intercontinental Exchange Incorporated, with its subs, engages in the provision of market infrastructure, data services, technology solutions for financial institutions, corporations, government entities. Okay. That looks cool. So here's ICE. They're a big data company. So they're doing exchanges, clearinghouses. Okay. Interesting. I haven't heard of this company. And they're pretty good size. 86 billion in market cap, 9 billion in revenue. PE is 35, 23, forward PE. Analysts think it's a little discounted at 17% dividend. Wow, look at this growth, 21%. What's their stock been doing? So the stock is having a decent 12 months, right? You add that dividend, you're up to close to 20%. It's had a pullback recently, coming down. I don't know what percentage that is, but it's pulled back a little bit. This is like it's a data company, and this growth looks really, really impressive. So 24, 20, 22, 17. Impressive growth. They've got a sizable revenue number. So when you're growing 20% on that revenue number, that's pretty impressive. Why is the stock pulling back a bit? I would think that the stock would really be rallying. Free cash flow looks phenomenal. Look at this growth in free cash flow. Real nice. Smooth data set. I like smooth data sets because it makes me confident that these guys are going to be a 4 billion free cash flow company in 1 year, because they've proven it. They're consistent. They don't have product costs. So it's 100% gross margin. They're selling data. Now you think about, I like this company. Right now they are selling data to a variety of industries. Awesome. They're doing a really good job of it. Great. But like the AI era is, companies are getting paid a lot of money if they own a bunch of data. And these guys own a bunch of data. So maybe that's what's going on here, is they're selling their data to other companies like Google Alphabet and Microsoft, and these companies are trying to build AI, and they need large data sets to put in their large language models to train what is in essence an artificial super brain that knows everything there is to know. In the case of this company, you're looking at, hey, I need to know everything in these industries. Well, these guys are a big data company, so we're going to pay them a bunch of money to access their data. And this company would benefit from that situation because they're making more money. There's a new revenue stream that didn't exist 5 years ago into the company. So I like that. Go for it. I think there's a question.
Yeah, what I wanted to say that I like them. I mean, I do not own them. I'm tracking, maybe looking for good entry price, but they own exchanges, or they operate exchanges. I don't know, like, for example, they operate the exchange in Israel, so that's why I'm kind of not familiar with them, kind of know about them. But as you see, they are operating exchanges across the globe, and they are acquiring them. I don't know exactly which of in the United States they own, but they own. So the more, what I'm saying, the more activity that we have in the stock markets around the globe is more revenue or more commission to these guys.
Yeah. Yeah, I like this stock, and they have a very good track record, right? You see how their stock price had a pretty substantial correction in 2022, along with everybody else. So okay, that one is explainable, right? In 2022, most stocks are being sold off, so it's not necessarily their fault. And then after that, you saw them rise. And I showed you their free cash flow, a really nice smooth growth rate. Their revenue is growing. And I'm seeing a lot of green flags here. So let's do a valuation kind of like, from soup to nuts here. And I'm going to compare this guy. I don't have a company like this yet, like it. What is probably closest to that one? Let me look at they're classified as a financial data and stock exchanges. Yep, I agree with that. All right, so we're going to compare these guys to
Victor. You've evaluated CME Group, right?
Yeah.
I imagine it's very similar to that.
It is. And that's the Chicago Mercantile Exchange. If you remember you remember Trading Places, the movie with Eddie Murphy and Dan Aykroyd? Is that a movie you remember, Scott? Anyway, that movie
I've heard of it. I don't know if I've seen it.
that centered around commodity exchanges, and so that's the CME Group. Okay, I'm going to compare them just to Robinhood because I couldn't think of a better example, so we'll just go with this one. All right. So these guys, where are they headquartered? So they are. So they're headquartered in Atlanta, Georgia. Okay. All right. And okay, so they're in Atlanta, Georgia. Now I'm going to open up a browser on my other screen and just kind of get the data really quick and fill it in. All right, so let's start with market cap is 86 billion, 30 million. Shares outstanding are 574 million. Okay, now let's get into some cash flow. So I really like their growth rate. And they have free cash flow on the trailing 12 months of $3.774 billion. Now they're growing at 20%, but their free cash flow has been growing. So it's been growing 11-12% per year. So I'm going to go with 10%. All right. Cash on the balance sheet is $755 million. They do have a little bit of debt. They do have a fair amount of debt. 21.5 billion is above the 3 times EBITDA ratio. So not a showstopper, but a little bit of surprise that they carry that much debt. They shouldn't carry that much debt. All right. So the equity value is 126.6 billion. I'm going to move this to 8.5 just because I don't know them as well. It brings down the valuation because it's a higher discount rate. But this is what I think this company is worth. 105 billion. Their market cap's 86 billion. So there's a 22% discount there. The analysts think it's 17% discounted. 15 analysts cover it. In 2025, they think it's going to produce $6.79 per share. They're growing at 20%. They were historically growing at like 10%. So I'm going to go with like a 30 PE. They're going to grow their revenues modestly in 25, 26, 27. So go with 4%. Yeah, I mean, it's a good looking company. The stock's settled down a little bit. The one concern I have is their debt's a little high. Why is it a little high? Did they acquire a business recently and had to go into the debt markets? Let's take a look at it together, try to answer that question. So let's look at the balance sheet. And so long-term debt. So it was 6.4 or 5.2. It looks like they probably made some acquisitions, right? Because they went from 5 to 14 and paid off some debt, and then they jumped back up to 18. So there's probably some acquisitions here.
Yeah, they acquired some company which is involved or the business in the mortgage mortgage business, mortgage exchanges or market. I don't know how to call it. Like it was a big company, Knight something.
Okay. And
Knight with K, not
Knight Ritter.
No,
Okay.
something else.
Okay. So these guys here, I see a lot of positives, especially like this is a good stock to kind of diversify a little bit because it's not like financial services like Citibank or a brokerage. These guys are like a data company, which I think is more profitable than like Citibank or an insurance company like Allstate. They're more profitable. They're selling their data. These guys are a little bit like the credit agencies. So if the stock could pull back a little bit more, man, this is going to be a good looking stock. It's good that it's pulled back a bit. I'm not sure if it's going to keep pulling back. It was up 33% on Friday when the whole market was really going up. So good stock to watch. It'd be nice to see it come down another 10, 20%. And then maybe at that point it would be a good buy for me. I don't know what you're thinking. Good stock.
The same, Victor. I think that you're right. As I said, it needs to come down to a better price. By the way, I see that super investor Daniel Loeb, you know this name?
No.
Daniel Loeb from, okay, good, never mind. He's buying a lot, increasing his position. Now it's 2.36 of his portfolio.
Mm-hmm.
Anyway.
Yeah, that's a good one. That's a good one. And a business that is selling data, I mean, it's just very lucrative, very good free cash flows. And it's going to, if anything, the world is, I mean, data just continues to be, valuable data continues to be in demand. And I think these guys, again, I don't know how much they're selling it to the AI builders, but like different industry, but similar situation. Reddit, the big social app, they sold their data, I know, to Google, who's building a big, AI thing. They had to pay a lot of money to Reddit because they have their data. Well, heck, man, I think the company we just looked at, they could probably do the same, start selling their data for these companies that want to build AI around financial services. And why wouldn't you want to build AI around financial services, right? Maybe you end up going to a loan company for a mortgage, and very quickly, an AI chatbot, does some Q&A with you. It says, hey, you're pre-qualified based on the data you've entered and based on the, you provided, let's say you provided your details like your social security number here in the US. It says, hey, you're pre-qualified. We would like to give you a loan for that house or for that whatever, for that car. And we're going to do that because our AI is built on really good data that we bought from this company. So this company is making money because they sold their data. So, all right,
we'll see how the things are shaping up. Actually, my thought is different. I would expect from a company that size, like $86 billion, that this company itself will build its own AI models and actually provide the APIs for other companies to use it. Why to sell it? I mean, Reddit, is small. I don't know what is the value of Reddit, but these guys are big enough to create their own AI.
You're right, but
But we'll
here's the
see.
thing. Here's the thing is, see, like I had never heard of this company, and so the name recognition, like, average Joe is out there saying, "Oh, I want a home loan. I want a line of equity, line of credit on my home." Well, if you were presented with Intercontinental Exchange, you'd be like, "I never heard of this company." But if all of a sudden you said, "Oh, this is Google," oh, you're very comfortable. Or this is Meta, comfortable. Microsoft, comfortable. Right? Costco, comfortable. So where I'm going is AI in a lot of ways is going to be consumer facing as well as businesses, big enterprises. They're going to want to be really comfortable and confident in the AI application. So the brand is going to have a lot of credibility, like a Google, like a Costco. You follow me? And I don't think Intercontinental Exchange does not have a brand that everybody knows.
I agree with you totally. And I didn't mean that they will be the customer facing. I mean, their customer is not you and me. Their customer is the other institutions. So if you have a big company, which is a mortgage broker, they will use
They'll
the-
develop a chat bot and say, hey, mortgage lender, you ever want to do AI stuff instead of hiring employees? You can use our chat bot. You just have to pay us
Yeah.
$1,000 a day that you use this chat bot, or $10,000 or $5 per application, however the pricing ends up being. That's possible. Yeah, that's definitely possible. Totally. And we will see that created over time. Not sure how fast, how slow, but that's where the world's going.
Actually, you make me curious. I will go and listen to their, to their events, quarterly or customer day or investors day, and see how many times they are saying AI. It's interesting.
And what you would listen for is, where are they putting themselves in the ecosystem of AI? Are they going to be a company that says, oh, it's going to be like Meta AI, right? Meta AI is like, hey, this is the AI app that's going to be touched by the consumer, by the user. Meta AI. Everybody's comfortable with Meta. Everybody knows Facebook, Instagram, WhatsApp. So you see how that brand is super important there. So that's part of the ecosystem, but you can be part of the ecosystem in other places. NVIDIA provides the, GPUs, the semiconductors. Intercontinental Exchange can be a part of the ecosystem by providing the data. And that's actually, I like it a lot because you make a lot of money without doing a whole lot. And you don't take a lot of risks, right? Meta AI could be like, oh no, our app was telling people that if they drink, house paint, it's good for them. And all of a sudden it's a big mess. Like, oh no, Meta is like apologizing and they're getting sued and all kinds of stuff. That's what happens when you're faced, with the consumer. And when the AI does make some mistakes, like the hallucinations that we hear about, those brands have to like quickly fix those things. So we'll see, find out where they are. They'll tell you in the conference call is AI, we're going to be a player by selling our data, or we want to be a player by creating applications that we're then going to sell to other businesses. They'll tell us because I'm sure their investors want to know, like, hey, what's going to happen with AI? Because AI is both a threat and it's an opportunity. Well, how are you guys playing it? How are you guys going to treat it? All right, good one.